subscribe now and press the bell icon. Never miss an update.
I'm Zachary Cefaratti. I'm the CEO of Dalma Capital. We are a DIFC-based fund accelerator focused on alpha-generating fund managers and products. We have about 15 different funds on our platform, generally in the alternative investment space. So alternative investments includes hedge funds, private equity, private debt, real estate, and early emerging strategies that are niche and esoteric. Over the last 3-4 years, we've started to also focus on funds investing in blockchain and cryptocurrency. This is an area where we actually developed one of the first regulated funds on our platform that we accelerated 3 or 4 years ago, called the Alphabet Fund. The Alphabet Funds performed phenomenally well. It was one of the first to actually be fully regulated, open-ended fund, working with tier 1 fund administrators, auditors, law firms. We created a very institutional grade investment product for investing in crypto assets. Since then, we've continued to partner with leading institutions and family offices to develop a whole suite of products that are focused in the space. Recently, we've been focusing on products that are investing in liquid cryptocurrencies, in arbitrage and trend following strategies that are purely algorithmic, and also investing in the security tokenization space. Our last major investment in a traditional ICO was in Telegram approximately 1 year ago, where we invested in the first round. This has been a space where we have been less active recently, as we believe that there is a very large addressable market in security tokens. A security token uses the technology and the innovation and value transfer inherent in Bitcoin and other cryptocurrencies and applies it to asset classes that are able to offer effectively security over an asset. That security over an asset gives investors a right to control, potentially to income streams, to revenues, to expectations of profit. But because of that dynamic, these instruments are deemed to be securities, unlike traditional cryptocurrencies. Traditional cryptocurrencies trade on exchanges that are not required to be regulated as financial markets exchanges because they don't match orders in securities or assets that are deemed to be securities. So Bitcoin, Ethereum, Ripple, or XRP are able to trade on traditional cryptocurrencies exchanges because they are not deemed to be securities. Historically, the issue with offering security or bringing securities onto blockchain is exactly the fact that because they are regulated as securities, they can't trade on traditional cryptocurrency markets. In 2019, though, we're actually seeing the emergence of security token exchanges. So these will be traditional cryptocurrency exchanges that are now obtaining licenses from relevant regulators in their jurisdictions that are allowing them to either provide marketplaces or matching engines as actual exchanges for security tokens or assets that provide security over an asset class. So this will create an ecosystem and an infrastructure so that there will be a secondary market for crypto-backed securities. We're currently working with several large institutions in the space, including a large global investment bank with approximately $45 billion in assets, as well as a $15 billion independent financial advisor to develop security token offerings that are focused on idiosyncratic investment opportunities in some cases, such as distressed real estate and other distressed asset classes and infrastructure. We're working with issuers that are creating real estate projects, and we're actually in the early stages of security tokenization of a financial institution and its holding company, so actually equity in that holding company. The benefit for issuers of security tokenization is they have the ability to remain private but benefit from a fractionalization of ownership in an instrument that is tradable on a secondary market. Now, whether those secondary markets will be as liquid as cryptocurrency markets is something that remains to be seen, but we believe over the next year the security token will become a commercial reality, and the size of the addressable market for security tokens potentially is in the range of $250 to $300 trillion, which means that even if they get a very small piece of that pie, it will be a very substantial and significant asset class.